How are you framing the next 12 months for clients? Never mind the next few weeks of economic data. What does the next year look like for you?
You can't get past the economic war we're in with China. Look, I mean, this is the world's undisputed trading and manufacturing superpower. It has unrivaled production scale. I mean, don't forget the lesson of the 1940s. Scale is strategic leverage. Okay, we're not just talking about dolls or furniture or bicycles or underwear. We're talking about goods that are critical for our economic security, our national security. So think about steel, cement, robots, drones, chemicals, pharmaceuticals. This is going to be a blinking contest. And in my opinion, we need China's supply at least as much as they need our demand. Think about this. Which country has a political system with a higher tolerance for economic pain? China. Which country has more policy space to cushion against economic pain? That's China. And which country has an interest in unraveling the economic order that we built? China. So look, we can get the upper hand again. I think what clients have to watch for is, can we pull off a diplomatic masterclass? Get Europe and Asia back on sides, get them to collectively tariff China, isolate Beijing, and pressure them to stop distorting global markets with overcapacity. That's what's at stake.
In your time in government, how difficult is it to do just that? And what were the lessons from your experience down in Washington?
It's very simple. If you're tariffing alone and you're tariffing across the board, that's a self-defeating strategy, and Beijing knows it. They know they have the cards. That's why we're making the calls to them.
Daleep, though, Beijing is feeling some of this pain, though. That Weibo post from CCTV came out the same day that we saw factory orders in China plunge. How long do you think it is until Beijing really does think, I need to come to the phones, I need to pick up this call from President Trump?
Anne-Marie, China plays the long game. They are not focused on quarter-over-quarter GDP numbers. They're a mercantilist power that thinks about leverage as strategic scale. If they're gaining global market share, they can endure far more pain than we can. We're sensitive to markets, we're sensitive to polls, we're sensitive to CEO sentiment, we're sensitive to back-to-school items. It's a very different reaction function here than it is in Beijing.
The Treasury Secretary, a number of the president's economic advisors, talking about getting these deals done very quickly with partners, South Korea, India, et cetera. How likely is it for those trading partners to also want to confront China alongside Washington?
My sense is they'll be eager to strike agreements in principle, memoranda of understanding, use whatever term you want, to reduce the threat against them. But when it comes to raising tariffs with the United States to isolate China, I think that's less likely because countries all over the world right now are hedging their bets. There's just too much uncertainty for them to decisively pull themselves into our strategic orbit. So, we're going to have to do this negotiation mostly by ourselves at this point.
During the Biden administration, you would say things like, we're not trying to decouple, we're de-risking from China. What are we doing now?
Well, I think under the current tariff proposal, we would be decoupling from what matters least without de-risking what matters most. So we'd be decoupling from items like bicycles and toys and underwear and low-margin commoditized goods. But I hear much less about maintaining export controls for our technological crown jewels. That's what we meant when we said de-risking. Those are going to be the items that determine our economic growth potential and our national security being intact. And I fear that the kind of deal we may end up with China is going to give away those crown jewels.
But the Trump administration has kept on the Biden administration export controls. You think they need to do more?
Well, they need to do more, and they need to keep the controls in place. And if I had to sketch out what an agreement in principle could look like with China, I was listening to your earlier guest on stage. We could very easily have an agreement in which the United States gets concessions on fentanyl, something on the Panama Canal, purchase orders on soybeans and aircraft and LNG, and some reduction of tariffs by China. China would also get a reduction of tariffs, let's say 60%, generous exemptions, some type of reprieve on TikTok. But again, the real prize for Beijing would be a relaxation of our export controls on the technological crown jewels.